Coinbase defends stablecoins against banking threat claims. Says, math doesn't add up. Banking. Stablecoin. Coinbase defends stablecoins against banking threat claims saying, math doesn't add up, as 90% of financial institutions explore integration amid $285 billion market. Crypto journalist. Hassan. Crypto journalist. Hassan. About author. Anas is a crypto-native journalist and SEO writer with over 5 years of writing experience covering blockchain, crypto, DeFi, and emerging tech. Author profile. Share. Copied. Last updated 1 hour ago. Coinbase published a comprehensive defense against banking industry claims that stablecoins threaten traditional financial stability, arguing the deposit erosion narrative is a myth designed to protect banks' $187 billion annual payment processing monopoly. The exchange released research titled, Beyond the Deposit Debate, challenging Treasury estimates of $6 trillion in potential deposit outflows from yield-bearing stablecoins. Research challenges banking industry's deposit flight claims. The defense comes as 5 major U.S. banking trade organizations lobby Congress to tighten Genius Act regulations, warning that stablecoin platforms offering competitive yields could trigger mass deposit flight similar to the 1980s money market fund crisis. Citigroup analysts particularly compared current dynamics to those of the 1980s, when money market funds expanded from $4 billion to $235 billion in 7 years, draining traditional bank deposits. However, Coinbase argues that banks park $3.3 trillion in Federal Reserve reserves, earning $176 billion risk-free annually rather than extending additional loans, contradicting claims of deposit shortages. The company contends most stablecoin activity occurs internationally, strengthening the U.S. dollar's global role without significantly affecting domestic deposits. The stablecoin market has grown from $4 billion in 2020 to over $285 billion today, with projections reaching $1 trillion in annual payment volume by 2030 and potentially comprising 10% of the U.S. money supply. Banks fight innovation while exploring stablecoin opportunities themselves. Last month, major banking associations, including the American Bankers Association and Bank Policy Institute, urged Congress to close perceived Genius Act loopholes allowing crypto exchanges to offer stablecoin yields. The group's site Treasury estimates that yield-bearing stablecoins could trigger $6.6 trillion in deposit outflows, fundamentally altering bank funding mechanisms. The banking lobby warns that joint marketing arrangements between issuers and exchanges could accelerate deposit flight during financial stress, reducing credit supply and raising borrowing costs. However, platforms like Coinbase and PayPal continue offering stablecoin yields, arguing that prohibitions apply only to issuers rather than intermediaries. Banking opposition faces contradictions as major institutions simultaneously explore stablecoin opportunities. Citigroup CEO Jane Fraser confirmed the bank is looking at the issuance of a Citi stablecoin, while developing tokenized deposit services for corporate clients seeking 24/7 settlement capabilities. Earlier in June, JP Morgan also launched JPMD deposit tokens for institutional blockchain payments while CEO Jamie Dimon was questioning its use case. The bank served as lead underwriter for Circle's IPO, which has climbed over 500% since its $31 offering price. It also appears that some institutions are showing approval to control stablecoins, as seen in the recent Bank of England's proposal for strict ownership. The bank caps between £10,000 and £20,000 for individuals and £10 million for businesses, which triggered widespread backlash. Critics argue that the approach puts Britain at a disadvantage compared to the US and the European Union, which have embedded stablecoins into their financial systems without such restrictions. Institutional adoption accelerates despite regulatory pressure. Earlier this month, Fireblocks launched a stablecoin payment network with over 40 institutional participants, including Bridge, Circle, and ZeroHash, processing $212 billion in monthly volume. The multi-stablecoin infrastructure supports seamless cross-border transfers and regulatory compliance across different token standards. Research reveals 90% of financial institutions actively use or explore stablecoin integration, with major corporations including Amazon and Walmart reportedly considering stablecoins to reduce transaction fees. Similar to Coinbase, Bitwise CIO Matt Hogan criticized banking complaints about competition, arguing banks should offer better deposit rates instead of abusing depositors as a free source of capital for decades. Average U.S. savings accounts yield 0.6% while stablecoin platforms offer up to 5% returns, creating competitive pressure. Coinbase research found no meaningful correlation between stablecoin adoption and deposit flight for community banks over the past 5 years. Stock price correlations between major banks and crypto firms like Coinbase and Circle remain positive at 14%, indicating investors view stablecoins as complementary rather than competitive. According to a recent Kirok projection, stablecoins will capture $1 trillion in annual payment volume by 2030, facilitating 12% of global cross-border flows. Adoption is accelerating globally, with payment giants rushing to adopt crypto payments. Recently, Visa partnered with Yellow Card Financial for stablecoin payments across 20 African countries, while MasterCard enables 3 billion cardholders to purchase crypto through blockchain integration. While banks are standing against adoption, Treasury Secretary Scott Bessent supports stablecoin adoption, arguing digital dollars will expand dollar access globally and increase demand for U.S. treasuries as backing assets. The technology offers payments up to 13 times cheaper than traditional banks, with instant settlement, making it suitable for the next generation of financial services. Follow us on Google News, Trending News, Recommended Popular Crypto Topics Price Predictions. China's DeepSeek AI predicts the price of XRP, Picoin and Solana by the end of 2025. Google's Gemini AI predicts the price of XRP, Dogecoin and Cardano by the end of 2025. Ethereum price prediction. Are bulls getting ready to push the ETH price higher? Why is crypto down today? September 15, 2025 XRP price prediction. Why the October 18, 25 SEC deadlines could trigger a breakout. Press releases. Ripple quietly transfers 15 million XRP. DOT miners emerge as hidden gem for retail investors. Price analysis. Ethereum price prediction. Huge ETH outflow signals incoming supply squeeze. $10,000 ETH could be weeks away. 17 hours ago. By Ahmed Balaha. Industry Talk. Live crypto news today. Latest updates for September 15, 2025. Bitcoin stabilizes around $116,000, while altcoins see mixed action. 1 day ago. By Jai Pratap. Best crypto to buy now in September 2025. Top crypto to invest in. 22 hours ago. By Alan Draper. New cryptocurrencies to invest in September 2025. Top new crypto coins. 4 days ago. By Inesis Tavares. 11 best crypto presales to invest in 2025. Presale crypto list. 22 hours ago. By Alan Draper. 16 new and upcoming Coinbase listings in September 2025. 1 day ago. By Elijah Rankovich. 15 new and upcoming Binance listings in 2025. 23 hours ago. By Elijah Rankovich. What is the next crypto to explode in 2025? September 9, 2025. By Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2030. 6 hours ago. By Leon Waters. XRP, price prediction 2025, 2026 to 2030. August 29, 2025. By Eric Huffman. Ethereum price prediction 2025 to 2030. 5 days ago. By Ben Beto.